ExamPrep.School. FLA Personal Lines Insurance Agent Exam, exam code InsFL-Pers55. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Florida statutes, rules and regulations, common to all lines. Florida statutes, rules and regulations, personal line specific. Property and casualty insurance terms and concepts. Property and casualty policy provisions and contract law. Types of casualty policies. Types of property policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following dwellings would not qualify for coverage under an HO3 policy? A. A one-family dwelling occupied by the insured. B. A two-family dwelling occupied by the insured in one unit and rented in the other. C. A four-family dwelling occupied by the insured in one unit and rented in the other 3. D. A five-family dwelling occupied by the insured in one unit and rented in the other 4. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. HO3 policies are designed for owner-occupied dwellings of 1 to 4 family units. A 5-family dwelling exceeds this limit and thus is ineligible. Reason A is not correct. A one-family owner-occupied dwelling falls squarely within the eligibility requirements for an HO3 policy. Reason B is not correct. Owner-occupied two-family dwellings with one rental unit meet HO3 eligibility rules, since they allow up to 4 family units. Reason C is not correct. A 4-family dwelling occupied by the insured in one unit with 3 rented places is allowed under HO3 guidelines. Question 2. Under an HO3 policy, what is the special limit of liability for theft of jewelry under Coverage C? A. $1,000. B. $1,500. C. $2,500. D. $3,000. The correct answer is B. The standard HO3 form caps theft of jewelry under Coverage C at $1,500 unless the insured purchases an additional endorsement for higher limits. Reason A is not correct. This figure is below the established special limit for jewelry theft, which is higher under an HO3 policy. Reason C is not correct. This amount exceeds the standard jewelry theft limit and corresponds more closely to limits for items like silverware or firearms. Reason D is not correct. This value is above the HO3 special limit for jewelry and is not the correct threshold. Question 3. A homeowner purchased an HO5 policy with $180,000 coverage A on a replacement cost basis. The replacement cost of the dwelling is $250,000. The policy has a $1,000 deductible and an 80% coinsurance clause. A fire causes $100,000 in damage. Under the terms of the HO5 policy, how much will the insurer pay for the dwelling loss? A. $80,000. B. $89,000. C. $90,000. D. $100,000. The correct answer is B. The business pursuits exclusion bars coverage for liability arising from any activity engaged in for financial gain, including home-based classes. Reason A is not correct. This calculation misapplies the coinsurance formula and fails to account for the deductible. Reason C is not correct. This amount applies the coinsurance percentage but overlooks the deductible reduction. Reason D is not correct. This choice ignores the coinsurance penalty and uses full loss amount without proration. Question 4. A renter insured under an HO4 policy teaches paid yoga classes in her apartment. A participant slips on a loose rug and suffers a broken wrist. The participant sues the renter for medical expenses and pain and suffering. Under Section 2 of the HO4 policy, which exclusion best explains why the liability claim would not be covered? A. Liability arising from the ownership, maintenance, or use of any motor vehicle. B. Liability arising from business pursuits. C. Liability for expected or intended bodily injury. D. Liability arising from ownership of animals. The correct answer is B. The business pursuits exclusion bars coverage for liability arising from any activity engaged in for financial gain, including home-based classes. Reason A is not correct. This exclusion applies only to motor vehicle incidents, not to home-based classes. Reason C is not correct. This exclusion applies only if injury was expected or intended, but this injury was accidental. Reason D is not correct. Animal ownership is not excluded under Section 2 of the HO4 policy. Question 5. Under a dwelling property form, DP1, which of the following perils is one of the three named perils covered? A. Cold weather damage. B. Water seepage. C. Internal explosion. D. Weight of snow. The correct answer is C. The DP1 form is a basic named peril policy that covers only fire, lightning, and internal explosion. Internal explosion is the only peril listed among the options that DP1 insures. Reason A is not correct. Cold weather damage is not one of the three named perils under DP1. Reason B is not correct. Water seepage is excluded under DP1 and not among its named perils. Reason D is not correct. Weight of snow is excluded under DP1 and not listed as a named peril. Question 6. Rick purchased a DP2 dwelling policy on January 1st with a $100,000 dwelling coverage limit and an automatic increase in insurance endorsement that specifies a 3% annual increase. On January 1st of the fourth policy year, what is the dwelling coverage limit, assuming no claims were filed? A. $109,000. B. $109,270. C. $112,000. D. $112,551. The correct answer is A. The automatic increase endorsement adds 3% of the original $100,000 limit at each policy anniversary without compounding. After 3 anniversaries, the limit is $100,000. 3% multiplied by $100,000 multiplied by 3 equals $109,000. Reason B is not correct. This applies compound interest for 3 years, but the endorsement uses simple increases based on the original limit. Reason C is not correct. This adds 4 years of increases instead of 3, overstating the correct anniversary count. Reason D is not correct. This combines compounding with an extra year, misapplying both the anniversary count and increase method. Question 7. A homeowner with a DP2 dwelling policy has a replacement cost of $200,000 but carries a $150,000 coverage limit. A partial covered loss to the roof has a $20,000 replacement cost and is depreciated by 10% due to age. Under the DP2 policy, how much will the insurer pay for this loss? A. $18,000. B. $20,000. C. $15,000. D. $16,000. The correct answer is A. Under DP2, partial losses are settled at actual cash value when coverage is less than 80% of replacement cost. The insurer pays depreciation adjusted cost, $20,000, 10% multiplied by $20,000, equals $18,000. Reason B is not correct. Replacement cost is not paid for partial losses when coverage falls below 80% of replacement value under DP2. Reason C is not correct. Prorating the loss to the coverage limit is not how DP2 handles partial losses below the 80% requirement. Reason D is not correct. This miscalculates depreciation. The correct ACV subtraction is 10% of $20,000 yielding $18,000. Question 8. Which of the following properties is not eligible for a preferred risk policy under the National Flood Insurance Program? A. A single-family dwelling located in Zone C of a participating NFIP community. B. A 4-unit residential building in Zone X with enclosures used only for parking and storage. C. A 5-unit apartment building in Zone B of a participating NFIP community. D. A manufactured home on a permanent foundation located in Zone B. The correct answer is C. The preferred risk policy covers only single-family homes, 2 is 4-family dwellings, and eligible manufactured homes in moderate to low-risk zones within participating NFIP communities. Apartment buildings with more than 4 units are excluded. Reason A is not correct. Single-family dwellings in moderate risk zones of participating communities meet preferred risk policy eligibility. Reason B is not correct. 2 to 4 unit residential buildings in Zone X qualify when below-floor enclosures are limited to parking and storage. Reason D is not correct. Manufactured homes on permanent foundations in moderate risk zones of participating communities are eligible. Question 9. An insured held an NFIP standard flood insurance policy on their former residence until June 30th without lapse. On July 1st, they applied and paid the full premium for a new NFIP policy on a newly purchased home. On July 15th, flood damage occurred. How will the NFIP respond? A. Deny the claim because the 30-day waiting period applies to the new location. B. Provide full coverage since there was no gap between the old and new policy. C. Cover the loss after applying the standard deductible. D. Provide coverage immediately because the policy became effective on the application date. The correct answer is A. The NFIP imposes a 30-day waiting period on newly written policies at a new location, and previous coverage on another property does not waive that requirement. Reason B is not correct. Continuous coverage on a prior property does not transfer to a new location and does not waive the waiting period. Reason C is not correct. No deductible applies if coverage is not yet in force. A waiting period must elapse before any coverage applies. Reason D is not correct. Standard NFIP policies require a 30-day waiting period before any coverage is effective, regardless of application date. Question 10. After an earthquake, a homeowner with $300,000 dwelling coverage under an earthquake endorsement with a 10% deductible incurred $180,000 damage to the primary dwelling and $40,000 to an attached garage. How much will the insurer pay? A. $190,000. B. $220,000. C. $186,000. D. $198,000. The correct answer is A. Earthquake endorsements apply a deductible equal to 10% of the dwelling limit, $30,000, once against the total covered damage of $220,000, resulting in a $190,000 payout. Reason B is not correct. A deductible always applies to covered damage. Total damage won't be paid in full. Reason C is not correct. The deductible is not applied separately to each structure. It's based solely on the dwelling limit. Reason D is not correct. The deductible is calculated from the coverage limit, not as a percentage of the total damage amount. Question 11. Under Florida law, what are the minimum liability limits required in a private passenger auto policy for bodily injury per person, bodily injury per accident, and property damage? A. $25,000 per person, $50,000 per accident, $25,000 property damage. B. $15,000 per person, $30,000 per accident, $15,000 property damage. C. $10,000 per person, $20,000 per accident, $10,000 property damage. D. $20,000 per person, $40,000 per accident, $20,000 property damage. The correct answer is C. Florida statute 627.727 requires private passenger vehicles to carry minimum liability limits of $10,000 per person, $20,000 per accident for bodily injury, and $10,000 for property damage. Reason A is not correct. These amounts substantially exceed the mandated minimum limits and represent a different coverage tier. Reason B is not correct. These limits exceed the statutory minimum and reflect a higher optional coverage level, not the required threshold. Reason D is not correct. This set of limits is higher than required by law and does not match the statutory minimum obligations. Question 12. Which statement accurately describes a combined single-limit CSL auto liability policy? A. It splits the coverage into distinct limits for bodily injury per person, bodily injury per accident, and property damage. B. It establishes separate limits for bodily injury per person and per accident, but no property damage limit. C. It provides a separate property damage limit and a single combined bodily injury limit per person and per accident. D. It provides one total liability amount that can be used for both bodily injury and property damage per accident. The correct answer is D. A combined single-limit auto liability policy offers one overall limit per incident that applies to any combination of bodily injury and property damage without separate sublimits. Reason A is not correct. This describes split limits, not a combined single limit that consolidates all sublimits into one amount. Reason B is not correct. This describes a policy that omits property damage coverage, which CSL does not do. Reason C is not correct. This option incorrectly separates property damage from the single combined limit, whereas CSL treats both under one limit. Question 13. A Florida insured has $5,000 medical payments coverage under a personal auto policy PAP and also carries health insurance. After an accident, the insured incurs $6,000 in medical expenses. According to the PAP's coordination of benefits, how will medical payments coverage respond? A. Pay the remaining $1,000 after the health insurance pays the first $5,000. B. Share equally the $6,000 covered expenses with the health insurer. C. Pay up to its $5,000 limit without regard to health insurance. The insured may then seek reimbursement for any balance from the health insurer. D. Deny payment because health insurance covers all medical costs first. The correct answer is C. The medical payments coverage pays first up to its limit regardless of other insurance, after which the insured can pursue the balance from the health insurer. Reason A is not correct. Medical payments coverage is primary and does not wait for the health insurer to pay before covering expenses. Reason B is not correct. There is no cost-sharing arrangement. The medical payments coverage pays up to its limit in full without splitting costs. Reason D is not correct. Medical payments coverage is not secondary to health insurance and will not deny payment on that basis. Question 14. A Florida resident has a PAP with $100,000 bodily injury liability per person and $300,000 per accident. While vacationing in Georgia, which legally requires only $50,000, $100,000, the insured is at fault in an accident. Under the PAP's out-of-state coverage extension, what liability limits apply? A. $50,000 per person and $100,000 per accident. B. $100,000 per person and $300,000 per accident, reduced by Georgia minimums. C. The state minimums only because Georgia law overrides the PAP. D. $100,000 per person and $300,000 per accident. The higher policy limits apply. The correct answer is D. The PAP automatically extends coverage to meet out-of-state requirements, but if the policy limits exceed the state minimums, the higher policy limits apply. Reason A is not correct. The policy does not reduce its stated limits when the state minimums are lower. Reason B is not correct. Policy limits are not lowered by state minimum requirements when the policy limits are higher. Reason C is not correct. State law does not override higher policy limits provided in the PAP. Question 15. An insured's 19-year-old child lives away at college but returns home during breaks. While driving the family car during spring break, the student is involved in an at-fault accident. Under the PAP's definition of family member, is the student covered for liability? A. No, because spring break usage of a family car is considered permissive use only. B. Yes, because any child of the insured is always covered, regardless of residence. C. No, because being away at college disqualifies the student from residency status. D. Yes, because a full-time student away at school remains a resident relative. The correct answer is D. A full-time student living away at school is still considered a resident relative under the PAP and qualifies as a family member for liability coverage. Reason A is not correct. Permissive use rules do not affect the family member definition for liability coverage. Reason B is not correct. Coverage depends on residency status, not solely on the parent-child relationship. Reason C is not correct. Full-time students temporarily living away still qualify as resident relatives under the PAP. Question 16. Under the standard ISO, personal auto policy, collision coverage ensures losses resulting from which of the following perils? A. Theft of the covered auto. B. Upset of the covered auto. C. Breakage of glass due to flying debris. D. Contact with a deer. The correct answer is B. Collision coverage under the personal auto policy applies to losses caused by the upset or overturn of the covered vehicle, whereas theft, glass breakage, and animal contact are covered under other than collision. Reason A is not correct. Theft losses fall under other than collision, comprehensive coverage, not collision. Reason C is not correct. Glass breakage from flying debris is covered by other than collision, not collision. Reason D is not correct. Damage from contact with a deer is an other than collision peril, not a collision peril. Question 17. Under the standard ISO personal auto policy for a covered theft loss, how long is the waiting period before transportation expense coverage begins? A. Immediately after the loss occurs. B. 24 hours after the loss occurs. C. 72 hours after the loss occurs. D. 48 hours after the loss occurs. The correct answer is D. Transportation expense coverage under the personal auto policy becomes payable 48 hours after a covered theft loss. Immediate or shorter waiting periods and longer periods are not applicable for theft. Reason A is not correct. There is no immediate payment. A waiting period applies before transportation expenses begin. Reason B is not correct. The 24-hour period is too short. The policy specifies a 48-hour waiting period for theft. Reason C is not correct. The policy does not require a 72-hour wait. The waiting period for theft is 48 hours. Question 18. While on a road trip, the insured's vehicle became disabled due to engine failure. The policy's towing and labor costs endorsement provides a limit of $100 per disablement. The insured incurred $150 for towing and $80 for labor to free the vehicle. How much will the insurer reimburse under this endorsement? A. $100. B. $150. C. $80. D. $230. The correct answer is A. The towing and labor costs endorsement caps the combined reimbursement for towing and labor at $100 per disablement, so only $100 is payable. Reason B is not correct. Reimbursing $150 reflects only the towing expense without applying the per disablement cap that includes labor. Reason C is not correct. Reimbursing $80 covers only the labor cost and ignores the towing expense, plus the cap applies to the combined total. Reason D is not correct. Reimbursing $230 equals the total cost of towing and labor, but ignores the endorsement's $100 per disablement limit. Question 19. The insured carries a stated amount settlement endorsement with a declared value of $6,000 on a vehicle whose actual cash value at the time of a total loss is $5,500. Under this endorsement, how much will the insurer pay for the loss? A. $6,000. B. $11,500. C. $5,500. D. $5,000. The correct answer is C. A stated amount settlement endorsement pays the lesser of the declared value or the actual cash value, so the insurer pays $5,500. Reason A is not correct. Paying $6,000 would ignore that the endorsement pays the lower of the stated value or the actual cash value. Reason B is not correct. Adding the two values is incorrect because the endorsement does not combine amounts for settlement. Reason D is not correct. Paying $5,000 underestimates the actual cash value and does not follow the lesser of rule correctly. Question 20. Which of the following best defines the self-insured retention provision in a personal umbrella liability policy? A. The amount the insurer will reinsure for losses above the umbrella limit. B. The annual aggregate limit under the umbrella policy. C. The per occurrence amount the insured must pay before umbrella coverage applies. D. The deductible applied to the underlying primary liability policies. The correct answer is C. The term self-insured retention refers to the per occurrence sum the insured must cover out of pocket before umbrella liability coverage responds to a loss. Reason A is not correct. This refers to reinsurance arrangements, not the insured's initial out-of-pocket retention. Reason B is not correct. This describes the overall policy limit, not the retention that must be paid first. Reason D is not correct. This describes a deductible on the underlying policy rather than the umbrella retention. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.